Morning, everybody. Hope you
Good
guys are doing
morning.
well. Matt, Dan, how the heck are you?
Doing well.
I
Happy Tuesday.
I don't see any pinch marks on you, so hopefully you didn't get it too bad yesterday
No,
wearing your orange and
that's right.
Pacers. You
That's
know,
right.
the Pacers, I mean, every day feels like a pinch, I imagine.
Wow.
But anyway,
Oof,
let's get started.
oof.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Mass backtesting like a daddy Mac. Dan's 30 years got our way. Trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone.
Shout out to Matt for his editing of that. Matt said yesterday, I want to change the length of the video. And I said, well, I too wanted to make it 7 or 8 minutes. So if you wanted to go for it, go for it. And he said, to my surprise, he said, I'm thinking about taking it in a different direction as far as length goes than what you're suggesting. So,
We had one requester who said, just make the whole show that intro, and then we had another requester who said, if you ever play that intro again, I'm never coming back. So
yeah,
it's the
Either love it or
dichotomy of man.
yeah.
yeah,
And by requester, you mean Matt. You mean yourself.
that's right.
It was not me.
Just kidding.
Troy, it's like LeBron. You either love him or you hate him.
It's true.
There's
It's true.
no in between.
You either love top level basketball or you hate top level
Ooh.
basketball. That's fine. Anyway, all right. So we got a big show today. For those who don't know, it's the day before FOMC. Guys, we'll talk about FOMC tomorrow. But what is FOMC for those who are new to options, and why is it Trader Super Bowl? Why is it Trader Christmas?
Well, the FOMC, so in trader speak, FOMC is they usually use it just as a shorthand for these typically Wednesdays when there's oftentimes a couple different events from the Federal Open Market Committee. Typically, it has to do with interest rates. There's oftentimes a meeting. There might be a rate change. There might be a press conference, and so depending on the number of events that there are, that can influence how influential there are. Usually, I think there's about 7 or 8 every year that have like kind of the whole slew of the different things talking. So, in the last several years, JPow has been the main center of attention, and it can move the markets. In December, there was a huge move of several hundred points, I think, on December 18th. Somebody could probably look, but I just remember we actually were having a meeting, and remember like CNBC was on, and they're like, "Oh, we're gonna lose 6,000. Oh, we're gonna lose 5,900. Oh, we might lose 5,800." And these meetings can have a big impact. So some people really enjoy trading around them, and some people really avoid trading around them.
Dan, what camp are you in? Do you love just slapping trades on when Jay Powell gets up, starts talking, or?
Well, no. It doesn't always seem. It seems like sometimes it's a delayed response. Like he speaks on Wednesday, but it's like by the time everybody digests it, it's like Thursday. It could even go. The party can continue till Friday. I mean, to me, one of the big things, this upcoming one, you tell your kids always, be careful the words you say. Words mean something. And I'll tell you, if there's ever going to be measured words, I mean, they say tomorrow, right, where he's not supposed to do, They're not supposed to do anything with the interest rates. And he's usually pretty John Wayne-ish to me, where he's going to stick with pretty tough guy, going to stick with what he normally does. But when he comes to that press conference, people are going to just like every stinking word. It's going to be, well, I think he's,
Oh yeah,
he's this
yeah.
or he's that. So, I mean, I don't expect, I don't know, Matt, have you seen much on that? Have you done any study on, is there more of a move on the Thursday or a Friday? I mean, Thursday's not much time left.
There's a lot of discussion in the Option Omega community, and there has been for years, about multiple different ways back tests for the actual Wednesday. There's been some observable patterns where a lot of times 0-day vol can be sticky until he speaks. And then oftentimes there's like trades around like 2 when the events start, between 2 and 2:30, people will put on trades. And then for a long time in the afternoon, there was a pretty predictable big move that a lot of people would trade as well. So some of those patterns have changed a little bit. And I think it is interesting because kind of for the Biden administration years, Wednesday was the Super Bowl. And now we have another major source of news with these tariff discussions. So it'll be interesting to see as that continues what the Wednesdays bring us.
Steven says it all depends on Powell's tie color. I think there's something
Shout
to
out
that.
to Steven.
Yeah, I think there's something to that. Anyway, we'll talk more about tomorrow. We might look at some FOMC trades if you are the type like me that like to lose a lot of money at once rather than slowly. So we'll go into that tomorrow. But first, real quick, 0DT rundown. Guys, tons of feedback from yesterday's show about vasectomies. Thought, my goodness, I think there might be an avenue here. I know we've enjoyed doing this together from the Option Omega show, but I don't know. Do you think there's something we could do together as far as the vasectomy show, the snip show?
No.
Okay. Well, then you wouldn't like what I found at the YMCA. People perhaps didn't believe me yesterday when I said, hey, vasectomies and March Madness go together, in this weird way. I went to the Y this morning, my local Y, to get into the hot tub, as I do, my morning routine, followed by the sauna. And I went there. As soon as I walked in, saw this picture. I crossed people's names out for their benefit. But this is a webinar they're doing, Vasectomy Madness, March to a Better Future. No rebounds, no surprises. So it's a real thing that happens around March Madness.
Troy, you got the data. I mean,
the data's there.
The data is there. And I just think this week is is it the first week of March Madness, or is this over the next 3 weeks that you found in your analysis?
Well, you'll have to go to the webinar to I mean, I'm not going to give away everything.
That's right.
But anyway. All right. So moving on, Dan, I wanted to know if you've taught so many people through the years. This is a market profile chart kind of zoomed out. And this is what's funny about this is you look at this price action, the top's around 5,900 and the bottom's around 5,500, let's say 5,550. This is ES. This is March. This is just 18 days of trading.
Yeah.
So the question is, Dan, is this a balancing market right now? Meaning, like, is this the last 2 days? Do we have the clear waters ahead of us to where we can start kind of slapping on range bound trades with a lot more confidence? Or is this a market that's still just kind of trending, and maybe this is the last 2 days have kind of been a counter move, if that makes sense?
Yeah, I mean that's always. I mean, we'd love to say in the world of range bound, range bound is like a EKG where the person is. This is a horrible analogy, where the person is past, right? It's just a straight. Yeah. It's a straight thing, and we don't always get that. I mean, I think the idea is in the world of range bound is what do we want at the minimal level is we want some two-way, and I think right now over the last 2 days or 3 days in the SPX, we've got a little up, right? The world's not ending. We have some two-way, so I'm comfortable with some range bound. But again, I think this thing called range bound, means different things to different people, right?
Yeah.
Like, for example, if you take something like we'll take two strategies and talk about it for a second. Let's take a butterfly, right? There's different butterflies that, to me, this is still a bit of a, we might be recovering from a Chicago snowstorm here with this correction down. We've come up a little bit. By no means do I think this is over, right? I mean, it's not clear, that the correction is over. It's not clear. I think it's too early. So the thing is, what do you do when it doesn't look like you're in a Chicago snowstorm? You want to go out and run your errands and stuff. What do you do? And I think size is a big deal. You trade less size, but you put trades you're comfortable in, right? You might not, when the market's going up and VIX is 16, it's, you can have a broken wing butterfly with more risk on the downside. It's fine,
Yeah.
But here, certain butterflies, because of the Greeks, and that's one thing people, I don't know if they understand, that the Greeks of your favorite strategy change when the VIX goes from 14 to 22. It's not the same, right?
Yeah.
Like a balanced butterfly, which we talked a little bit about the other day. A balanced butterfly doesn't look so hotsy-totsy when the VIX is 14 or 15 because the deltas are too short, but it's wonderful when the market's going down. Its deltas are under $1. It performs like a battleship on the downside. So it's a lot of it is what trades are you comfortable with, but putting a trade on that you feel comfortable can handle 200 points on the downside and can be okay on the upside. So it's a matter of less size. It's a matter of tweaking the strategies. Let's even take a calendar for a second. You take the world of calendars and DCs, double calendars, and you say, how do those perform in a wild environment? Well, you could say, Dan, you don't want to normally buy volatility when it's high. Well, you do when it stays up, right? When the volatility stays up. And double calendars, as Matt, was mentioning, with this kind of volatility, have performed well because what's the benefit of calendars and double calendars when the volatility's up? You get break evens from here to Las Vegas, right? I mean, you get wild break evens. And as long as the music doesn't stop, right? As long as the vols stay up, you do well. And then one last thing, when the VIX is 15, 14, not that you can't do RICs, reverse iron condors, but right now when you're getting a steady dose of what would you say, I have not seen in a decade, maybe that's being dramatic, where you've had candles near 100 points every day for weeks.
Yeah.
So reverse iron condors, strategies like that, have done well. So I think it's also important. What I've noticed is when the market gets volatile, people talk less. They hide under their bed because what their little thing that they've done maybe isn't working. Instead of coming out and saying the other side of the coin, well, what is working? If you're saying that iron condors aren't working, well, what about the opposite of an iron condor? A RIC. Or if your calendar's not working, what? So I think it's coming out. There are people just aren't used to the downside. I mean, I think that's the bottom line. If you look at most people that have been trading for 10 years, their experience is the upside. And so when you get to the downside, it's scary because, we've gone down, 3 weeks in the market, we go down 650 points, and it took almost 5 months to go up 650 points. So that puts people right away like, this is bad stuff, right? Yeah. And so it's coming out and discussing as the communities what is working right now. And there's plenty that are working, led by Mr. Rick, reverse iron condor, double calendar. The names you wouldn't think. Now, on the other hand, real quick, the VIX hit 20 yesterday, which when you think about it, that says something right there. The fear started abating on Thursday morning. But we gone from last Tuesday, we hit a high of 29 in the VIX till yesterday, 20. That's crazy. And that's just saying, hey, guys, we've gone a little too crazy with we wouldn't be at 20 if so I think right now you could do range bound, but you can do spec because the candles haven't gone to zero. Even yesterday, I think the candle was what, 80, 70 points, 80 points.
What did we get down to yesterday intraday?
Yeah, so I don't think we're range bound. I don't think we're pure trending down now. I mean, at this second, there's some two-way. And again, we could still hit 5,500. We could still hit 5,900 at some point. But I think it's focus everybody on today. What's the market kind of giving you today? And anyways, I mean, I don't mind it with the VIX at 20 or 19 because we've had big candles. I don't mind some long Vega here, which I normally wouldn't like at 19 volatility, but you're getting the movement to support that. So, anyways.
No, I agree.
I was just going to say it's interesting. It's interesting about the VIX because if you look at ES, we're up 30 points, 35 points. I looked last night once and we were up, I think, over 40. And so normally you're up, 30, 40 points. You're going to see VIX nosedive or at least tick down a little bit. And it looks like VIX might open up this morning. So it's interesting in these markets because in low VIX, it's like almost a given that market up, VIX down. But when you get into this kind of middle VIX scenario, people always associate VIX with being fear instead of a volatility. So us up 30, ES up 30 points, and VIX up is something that you see a little bit more in this kind of range of, like you said, Dan, where, low 20s VIX. So it certainly makes things more exciting and more interesting, most folks would say.
Yeah, and I think balancing, to Dan's point, balancing it's not like if a market's in balance, it's going to like go in a 5-point range or the ranges are going to be smaller. If you're coming out of like a giant 100-point, candle a day, the balance of that, the balance is always going to, at least the first couple of days while volatility is getting wrung out of the market, the balance is going to match the what just happened.
Yeah.
And eventually the vol gets compressed out of the market and you'll start getting ranges that are tighter and tighter and tighter, and it starts coiling up, but we're not in a coiling phase right now. Or if we are, we're like on the first round of that coil. We got a lot more coil to go.
Yeah, one thing, I think actually futures might have rolled over last night. So inverse what I said about being up 30 points, we might be down. But VIX, let me check on VIX because that's kind of what I was interested in. Yeah, VIX, it looks like it's up about $1. So close to 4 or 5%. So it looks like it's about a 23, 24 point move in the futures right now.
Yeah. Well,
of course, that'll change by 9:30.
Yeah, and we'll have more to talk about as far as FOMC tomorrow for sure. So let's do this real quick. Let's look at 2 tests if you guys are up for it. We talked about DCs yesterday, and for those who want a Good Friday DC test, we showed yesterday. I'm going to show 2 more, and one is another Friday DC, and then one is using the floating entry time that we have, and we'll talk about that. So here's the first one. Can you guys see my screen?
Yes.
Okay. So this is a 5-7. I think the other one we had yesterday was a 5-7 too. But this is put on at 3:55 p.m. This is end of day, whereas the other one was put on around 1 p.m., 12:55. And what's hilarious about this is largely the exact same trade as the one that worked really well yesterday that we put on at 1 p.m. The exit conditions are a little bit different, but the entry, the deltas are the same. And it's using 10% of portfolio. Again, probably shouldn't do that, but we're not financial advisors. Consult with your financial advisor and ask them if you should put 10% in one trade,
Yeah,
and then follow
I
that.
can talk about that after you're done. Yeah.
Yeah. And then the profit target. So there's a couple exit criteria. We're going to try to get out 50% profit target. If we don't, we do at a 35% profit target, we're going to close 50% of our allocation. So if we've got two contracts open at 35% profit target, we're going to close one of those out. We're going to exit the trade at 9:45 the morning of that next Wednesday. So when you see 5-7, the way this works for Option America, when you see 5-7, that means the shorts expire. If this is a Friday, they're going to expire Wednesday. Well, when you see exit trade at 9:45 a.m., that means that we're going to get out 9:45 that morning of expiry. And so that's that. Or the way the stops work, you're going to exit when the call gets tested and goes a little bit past it and a little bit past it for the put as well. And then we've got some closing stuff, kind of make it realistic. So again, for those who missed it yesterday, Matt, you've seen a lot of these. Dan, you've traded double calendars a lot. Why does that Friday model work so well? Of just slapping a DC on Friday.
For a Wednesday, Friday.
Yeah, Wednesday, Friday. So starting Friday, going till next Wednesday, Friday.
Well, Matt, go ahead. And then
Yeah. So, I mean, first of all, let me, can I talk about this test just for a second before I answer that? I think this one, we have, there's variations of this test that have been floating around for several years now in OO. And if you, Troy, while I'm talking about it, can you just run this thing year to date for people, if you don't mind? And then we'll go back to the version you have. But the whole idea with DCs, is that they can win a couple different ways. They can also lose a couple different ways. And so with this one, you're putting it on later in the day on Friday, close to the bell. A couple of the moves we've had this year have been earlier in the day on Friday. So I think the week of that deep seek gap down, we had 100+ move in futures from Friday to Monday, but from Friday afternoon to Friday at the end of the bell, there was a pretty significant move already. So with this one, you're putting it on later in the day on Friday. You're getting out Wednesday morning at 9:45. So with DCs, the ideal profit condition is that you hold them, and whenever you close them, that you're late in the day or as close to the shorts decaying as possible. The closer you are to the shorts decaying, to where the shorts have less value, but you're near one of the two profit tents. And those are typically the strikes of the puts and the calls. And then volatility has a lot to say about it as well. So one thing with this test, because it's exiting at 9:45, there's going to be less exposure to volatility on the final day than there would be if you were holding it till, say, 2 in the afternoon or 3 in the afternoon. I think there's some people out there who hold the DCs till the shorts go totally worthless, which the brokers have strong feelings about, because that can, depending on what condition the shorts are in, that can put the brokers in a spot where the risk management department doesn't like it. So in this back test, it's exiting Wednesday morning, and so you have that rail, then you have partial profit targets, you have another profit target, and you have a rail to where if the movement of the underlying, if SPX moves too far past either the put or the call, all of those would prompt the back tester to close the back test and exit. You can see the most recent run that even though VIX was high, it opened, and on Monday afternoon, it was already 1.5% past the puts, and got out for a loser, not a giant loser, but definitely a loser, because of that large move early-ish on in the test. Remember, you put it on Friday afternoon at 3:55. In this example here, you're out Wednesday at 3:07, so you're in at less than one trading day. And as you can see, if you go back, you can see that the put tested happened the week before as well. There've been a lot of these big moves. So 5/7s have had a rough go, a lot of 5/7s. Now, again, I'm speaking generally about this test, generally about 5/7s. There are an infinite number of 5/7 backtests you can do. The number of variables that you can change on this backtest is limitless. You could backtest putting it on much earlier in the day. You could backtest completely different deltas. In 2022, I remember seeing backtests where people were backtesting deltas on DCs with like single delta, not one delta, but like 9 delta legs, because the movement was so crazy and the VIX was so sticky. Now, those are going to have a lot different profit setup and profit profile in most markets. People wouldn't even dream of testing those. But in this market, as Dan said, when VIX is 20, 22, 24, 26, your legs are pretty far apart because that delta is pricing in the width of the legs. So that's kind of the setup. As a reminder, this backtest is using 1 minute data. So it's a pretty high frequency. It's checking the pricing once per minute and checking the profit targets. There's also fees. There's slippage. So there's entry slippage, which is going to increase the cost of the debit. There's exit slippage, and exit slippage with a profit target in OO works really nuanced. You have to get past the profit target by the slippage amount before it hits. And it also has a cap profits, which functions like a limit order in the back test. And acquire 2 hits a profit target, ensuring that the profit target is met 2 minutes in a row. It would get you out at the first minute, but that's just we call it the part of the punisher, just making sure that you have some robust measures in there so that you can have a backtest that has high confidence in. And these things are old, kind of old hat in the OO community. About 3 years, people have been trading variations on this type of trade. So it's been around, and if you're interested in DCs, they're talked about every day. Now she'll make a Discord community, which is where our community lives primarily. So
Can I make a couple quick comments?
Please,
Yeah.
Dan.
On the I just want to say a couple. I mean, first of all, I think Troy's right on with, where the danger, Will Robinson, as they say, on double calendars is when we go through the short strike. But I think and so I think it's great to have, if we're too far past a short strike, abandon mission, right? It's not going to work as well. But I want to call something people don't pay enough attention to when they're doing double calendars or this type of double strategy. I'm going to call it the mother-in-law syndrome, right? And I love my mother-in-law, but it's like if your mother-in-law comes over for Christmas a month before she should, right? And that's a horrible thing. I love my mother-in-law. That could be
we all love shout out mother-in-laws.
We love mother-in-laws. And but here's the thing. If you have a double calendar on, let's say you put it on Friday, you sell Wednesday, and then you buy Friday, right? That's what we're talking about here. Correct? On this? Yeah. So Monday, here's the scenario. Monday morning, we're right around the short strike put, right? We're 5 points away. I'm very uncomfortable. You say, Dan, don't you want the price near the short strike for a double calendar? Absolutely, but not 40, not that early, right?
Not anywhere close. Yeah, right.
Sometimes
exactly.
I've abandoned mission, or I've actually, if it's, let's say I have a double calendar on and we're there, I may take off. Again, I get there's a lot of things can happen here, and you don't want to abandon a successful back testing mission, but sometimes I'll take off the call side and just say, you know what, I'm a little uncomfortable that we're at our destination this early. And I think that should at least give people a warning, if anything, that sure, you want to let it play out, but that's usually not a good thing when you're that close to your destination early. But I think the overall, having some kind of rail that if it goes through the short strikes, because that's where it is. It just, but again, there's a big difference. If you look at any from an analytical point of view, what a difference if you hit that short strike right away versus if you hit the short strike in a day and a half or 2 days when Decay has had a chance to shine. And it's a big difference on some of these strategies. Anyway, just something to think about.
Yeah,
I
and
agree.
one thing that's interesting, which we'll do on another show, is you can actually run back tests on double calendars, splitting the put and call side and
Interesting.
treating them separately, which there's some pretty interesting back tests. Again, double calendars are the rainbow. They kind of start and stop, go on forever. They the depending on the deltas, there's back tests you could do where people trade them in higher deltas and then treat them separately and exit them at very different times.
Really?
Obviously, yeah. So there's we'll do that on another show. Troy's running a couple different iterations of this one. One that I noticed that you were interesting, which just is a commentary on not just the double calendar but also the market. What was interesting, Troy, is if you took the exit rails off during year to date, this back test performs much better. And what I would look at and say to that is that speaks to the large candle swings that you've seen in both directions. I think it was the one. Nope. Go up, Troy. That one right there. That one right there. There you go. So here's what's super interesting about that last back test. Troy, can you click on the trade replay on March 7th? That last back test opened up at 1975. And when we look at the price of that, we're looking at the yellow, right? So as you can see, it had a steady drumbeat down until the 11th, end of the day. And then or afternoon, it started to recover. And then if you look at where the trade opened up the next morning, you can see there was a pretty significant change in the trade value. And if you look at it, you can see it was a difference in not just the VIX, but also what the market did. So, there are different ways of trading these DCs. And a lot of people, again, this is not financial advice, but a lot of people, when they're setting a back test, are going to put rails on them. And the rails get you out, close the back test if they are violated, right? And there's multiple different rails and there's multiple different ways of setting up, as we're talking about. But in this case, this is just one data point, right? It's random. It's one data point. To me, this is just showing how kind of wild this market has been. And if somebody was doing this back test without rails, their DC would have gone from about $14 on the 11th. And then on the 12th in the morning, it would have been up over 26. So a huge change in price, which again, it's instructional to understand kind of how DCs work that way. So
Yeah.
it's super helpful. And again, this is a small data size. We're just looking at 10 trades. So drawing conclusions about the robustness of a back test from 10 back tests is not what I'm saying and not what I'm doing here. I'm simply talking about that as an illustration of how the DCs work, and also an observation of what the market has been these first few months here of the Trump era, the tariff talk era, the Ides of March, whatever you want to call what we're in right now. So
Yeah, and last thing I'll say about this, and then we'll call it a day, so that people can get ready for the market. But to Matt's point, when you have a long dated test that's worked really well, and then you start seeing a drawdown, two things will happen. Usually, people just completely abandon that, and I'm sure Dan's seen this like 4 million times in his life. Of like, I've won 10 straight, and I lost 2, and now this trade is terrible. It doesn't work anymore. data.
Instead of looking at it and saying, okay, like in the options Omega, you can filter the losing trades and see, okay, what happened? Did VIX change? I mean, think about any range, any trade like a double calendar. There's only two enemies, where you look: price and volatility. That's it.
That's right.
The rest is conspiracy. Yep. So if you look at price and volatility, you can see, okay, what happened? What changed? What's going on here? And that's where the energy should be spent, not that I'll never trade this again. I get that often. Over the years, I've got this a lot. Well, the market's changed. Range-bound trading isn't going to work anymore. And I'm like, that's really an Archie Bunker statement, if I ever heard one. Instead of looking at, wait a second, what's going on? I mean, surfers, surfers don't just say, I'm never going in. This condition the last 2 days is horrible. I'm never, no, you just, okay, I'll stay out a couple days or whatever, but focus on what, dissect what actually happened before you make this world event. I'm never going to do a DC again,
And that, yeah, exactly. And the other part to it, to that point, is you might think, well, I need to adjust it. I need to make it different for the environment. And sometimes that is true. I mean, this is really nuanced, but sometimes that's true. You come up with a different strategy for this environment because the data is always changing. You're getting more data. Obviously, that's the nice thing about backtesting is you'll have the data now this last 4 weeks. But what you don't want to do is take a trade like this. Anybody who actually traded, like if this was someone's account of this trade, that they decided to do 10%, they would be very, very happy.
Yeah.
Like, no, this is just, it's easy to backtest into kind of your eyes glaze over, like only 14 million. Like like just take a step back and be like, that's a great trade. And that helps. Then two, if you see a drawdown and you start testing different scenarios, like year to date, if you take the guardrails off, it does a lot better. Don't take the guardrails off. Like you have 10 trades. Like when in doubt, don't take the guardrails off. Especially
10
if it's a
trades
winning
isn't
trade.
enough. Yeah, that's not enough of a data set.
You see this every day. I saw this yesterday in the Discord. Someone talking about 100% win rate going back to like 2022. This one trade. It's a put selling. And someone wisely said, 100% win rate, going back to 22, two things are happening. A, you've curve fitted the heck out of this test to where it always is going to win until it doesn't. And when it doesn't, how many trades are you going to have to win to get back? And that's the type of high probability trades. It's a trade-off. Any type of high probability trade, you win 80, 90%, but when you lose, the loss is much, much bigger. Normally. Now, there's great trades that exist that's not the case, but normally that's how the odds work. So anyway, we'll keep talking tomorrow. We'll keep going with DCs. I'll show you the test tomorrow for those who are interested. Tomorrow we'll look at a DC that basically opens at any point in the day when there's we're up 0.25%. So we open a DC anytime the market goes up 0.25%, up till one time a day, if that makes sense. So anyway, and then we'll talk about JPow, and I'm sure he'll talk about us. So blessings to you guys. I hope you guys have a great morning. I'm driving to Myrtle Beach, the Pigeon Forge of the Sea. And
beautiful.
I will see you guys tomorrow. Have a good day.